You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Options Bootcamp is brought to you by tastytrade. Ready to shred your paper trades? Then trade at tastytrade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back. It is Education Wednesday. That means it's time for us to hold court for a little bit of the old OBC, a.k.a. Options Boot Camp. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you are mainlining these days. Three things to remind you of at the top of the show right here. First off, if you're not listening to the full network, man, you're missing out. You're going to see what you're missing out on in a little bit when we get to some of the stuff we're talking about here on the show and what we've been talking about on the network this week. Then, of course, if you like what you hear, this show, anything else on the network, really, throw a star, a like, a comment, whatever your platform lets you do. There's a million different platforms. They all let you do a million different things. Whatever it is they let you do, if you do it, it helps people discover the show. It's pretty simple, and it helps folks discover the content. We all have friends and acquaintances that are just learning about options for the first time. Help them find their path to the land of the boot camp. And, of course, if you want to find more great content, like a great pro Q&A is coming up with our buddy, Mr. Bill Ulivari, a longtime market maker and risk manager over there on the CBOE. So he knows a thing or two about options, and now very heavily into the world of crypto. So he covers those two Venn diagrams very nicely. So kind of a fun conversation there. If you want to talk about the worlds of, he loves covered calls, in the money cover, all kinds of covered call strategies. He's been doing them forever, as well as, of course, how the intersection of derivatives and crypto works and what's going on both sides of those. Then join us for the Pro Q&A coming up immediately after this program for all of our pro listeners. So if you're in the live already, get in there. If you're not in the live, what are you doing? TheOptionsInsider.com/pro. The live's just the beginning. That's just table stakes. You're getting 2 shows a week on your own exclusive podcast feed that has about 250 plus episodes in it right now. So trust me, if there's an options question you have, it has probably been answered in one of our pro Q&A sessions. Options Oddity is also awesome. And it's November 1st. So we should probably do some giveaways coming up here soon as well. So a lot to go on here. We got to get our ducks in a row for our giveaways. The months fly by, listeners. Speaking of things flying by and all sorts of names, let's get out here. Who's joining me here? And again, listeners, we're recording this on November 1st, so we're in a bit of a post-Halloween, just, the post-candy miasma. We had a fun time last night. A lot of great trick-or-treating going on. I put out all my spooktacular offerings. The kids love them. Parents loved them. Nice thing when it's snowy and sleety on Halloween, one of the best things in the world is to trick-or-treat indoors, and that's what we do here in downtown Chicago. It was awesome. The parents love it. They get to go around with a beverage. The kids love it because they get to stay in and they get boatloads of candy. And it's a good time was had by all. Let's see if my cohort had a good time. I am joined once again by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call Mr. P. Welcome back to the show. How was your Halloween, sir? Are you recovered from your candy coma?
Oh, yeah, I was just trying to initiate another one, but I guess I have to finish that after the show.
Yes, the diabetic coma can wait till after the candy coma you have recovered from here. On the show, I mentioned at the top of the show, listeners, that if you like what you hear, throw some stars. We got to thank our listener this week, Magomed, to give us 5 stars. Not sure what platform this is coming from. He just wrote, "Thank you very much." He's a man of few words. It might have been translated from another language. So wherever you're getting the show, whatever platform, whatever country you're getting it in, we do thank you for taking the time to listen here. And Mr. Dan, as a bonus for you, sir, for shaking off your candy coma to join us today. I mentioned it is the first of the month. That means it is time for us to give away our Pro Trading Crate for the month of October. All of our Pro members' names are in the hat. I just fired up the random number generator, so it is spinning. Mr. Dan, you call the shot. You tell me when to stop, sir, and we shall announce this month's winner of the Pro Trading Crate. Have at it, sir.
Round and round she goes. Where she stops, nobody knows. Stop.
All right. Perfect. You and I are just in sync, sir. I hit that mouse button the second you said it. I was poised on a knife's edge, but now we are ready. All right. Who is that? Let's see. Got to scroll down a bit here. Got some names going here. I always like to see that. I like to see the new names. Welcome to all the new people. I'm remiss in doing that. Welcome to all the new people who join us on the Pro all the time. We'd love to see you all in there. And this is like one of our newer members as well. This is Wolfpack. I like the handle. You get bonus points, especially this time of year, Dan. Wolfpack, a good handle for the Halloween season out there. So congratulations, Wolfpack. Our producers will be reaching out to you post-haste to get your info. You're going to get some great educational info. You're going to get some exclusive goodies from us here at the Options Insider. Then the rest is just a smorgasbord of some of the coolest, rarest, weirdest items from the world of options that we have in our vault. And trust me, there's some cool stuff in there, some valuable stuff in there. Well, people are like, "You're sending this to us?" I'm like, "Yeah, have fun. We like you." So head on over if you want to be in the hunt like Wolfpack. You want to be in the hunt for the next crate, listeners, theoptionsinsider.com/pro, the place to go, as it's that spooky season, listeners. So it's time for us to get into a little bit of the old Halloween spooktacular options drills.
Holy mooch! Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
We need to swap that one out for a little bit of a spookier transition right now, Dan, because it is the first, so technically post-Halloween. But you know what? It's always spooky season here on the show, Dan. We love ourselves a good bit of Halloween, myself in particular. So I had a fun conversation with one of our regular guests on the old Options Bootcamp, our buddy Mr. Matt Amberson from Orats. He was on the Advisors Options show that we do on the network here yesterday. And we got into a conversation because it was spooky season about what are our top 5 scariest, spookiest, most terrifying trades of all time. Now, we're not talking about trades we personally have done where we've lost money. Listen, this is when you're looking at the options world. A lot of people are scared of options. They're scary. I get it. So it's a good time to investigate that. So I thought it was a great conversation to carry over to this program as well, Mr. Dan, because we're better than the old OBC to talk about some spooktacular trades. So let's get into it now. Our top 5 most terrifying options, trades, / strategies, whatever you want to call them, of all time. Dan, I will kick it off to give you some time to ponder because I just kind of sprung this upon you. So number 5, again, I was talking about these a little bit yesterday. In fact, it hasn't even hit the network yet, listeners. Only the live folks got to hear that yesterday. So you're getting a little bit of a sneak peek if you're listening live right now. And my number 5 scariest options strategy out there is definitely going to be the naked short put. Now, everyone, when they talk about selling short puts, people usually they get their hackles up, they get a little bit concerned, the hairs on the back of their neck stick up. And for obvious reasons, it's a spooky strategy. They think, oh man, that's just nothing but risk. And that's going to wipe me out. And yet here it is at number 5 on my list. And obviously there is risk to selling a put. We talked about selling puts many times here on the network, listeners. Go back and listen to the archives if you're not familiar with that strategy. And there is risk, especially that gap risk if the underlying shoots down in that period, selling that put. Not exactly going to work in your favor. But at the end of the day, if you're willing to work a limit buy order in a stock, you should be willing to sell a put because at the end of the day, it's effectively the same risk you're taking. We all learned in the post-pandemic period, there is risk to working orders in any underlying. Crude oil going negative, GameStop going to $1 million. In both directions, there's risk. So if you're going to work an order and incur risk, you should be compensated for it. And that's where the short put comes in. But it's number 5 on my list because there is risk to it. Maybe some people often hype it as being more risky than it is at the end of the day. It is a tool like anything else. But it's number 5 on my list, Dan, because at the end of the day, as scary as it sounds, as terrified as people are of this strategy. In fact, if I were to put this in terms of people's perceived strategy and perceived terror, then this might be number 1 because everybody's terrified of the short put. But at the end of the day, a stock can only go to 0, Dan. So you do have finite risk. As much as it might seem like it's infinite when you're blowing through strike after strike to the downside and it just seems like it's never ending and the pain will never stop. Trust me, I've been there. We've all been there. But at the end of the day, it will stop when you get to 0, unless you're talking crude oil in 2020. That was a bit of an aberration. Outside of that, it will stop when it gets to 0. So because it is a finite risk, but still a risk, it comes in at number 5 on my list. Mr. Dan, what are your thoughts on my number 5? And then what is your suggestion for the number 5 most terrifying options, strategy, or trade of all time, sir?
I like your number 5, Mark. I like it a lot. Those can be pretty spooky. My number 5 here is going to be one that I got a feeling you might agree with. Straddles. Straddles are
interesting.
They're tricky.
Spoiler alert, I may have those on my list as well, but maybe in a different spot. I'm just putting that out there.
Yeah. The thing about straddles is like they're scary in like a way where like you see a little spider in your house that you never saw before, and maybe it's like, kind of audacious looking, maybe it's got like a weird pattern on it and you're like, I don't know what that is, but I should just be careful because it might kill me, but I don't really know. So, not like panic, but the thing with straddles is most of the time you lose on them and it's just like a painful bleed. And anybody who's treated a lot of them, and I have, you get that, 10 times bitten, twice shy thing. And, or 10 times bitten, 11th time shy. I don't really know how that goes. And so, it's like you just kind of want to avoid them. But, when the setup's there, you take it. But it's like, oh, man, is this going to be one of those many times when I just get bitten the behind? So that's my number 5.
So to put it in your words, straddles are an audacious spider that you've never seen before lurking in your house. I like that. That's an analogy I can get behind. That's a perfect Passarelli analogy. I like that. All right. I'll have more to say about straddles when they pop in my list in a little bit. Spoiler, Mr. Dan. But now for me, number 4. Number 4, most terrifying option strategy of all time, listeners. And we're going to go, again, there's going to be a theme to mine. A lot of short premium, a lot of naked short premium coming in on mine. Hint, hint. For number 4, downside, listeners. Now we're going to the upside. We're going the naked short call. And why is this terrifying? Well, endless numbers of reasons, but just rewind to January through, let's say, June of 2021, if you want to see what risks are involved in selling naked short calls. Pick your underlying. Didn't matter. GameStop, any other meme stock, Mara, Riot, I could go on and on. Even sleepier names like Ford were exploding to the upside in that madness. So it was naught but risk to the upside. Now, if you could manage it with covered calls or spreads, you did all right. But of course, just naked short calls. And this is why we say, listeners, at the end of the day, net short units is a bad idea in the world of options. You never know when a January of 2021 is going to rear its ugly head, or March of 2020, or pick your other poison out there. And these things are just going to explode against you. Naked short call is really just its own beast. It is endless risk because at the end of the day, we all learned stocks can go up and up and up forever, seemingly. And look at GameStop. Worthless almost the beginning of 2021, and then hundreds of handles to the upside, trading at 1,000+ volatility is just maddening out there. So if you're short that call, you're wearing all of that. And at the top of that, now brokers have wised up to this trade, so they margin the hell out of you out there. So it's very rarely worth it to sell a naked short call anyway, just from a margin perspective. And on top of that, you factor in the nearly unlimited risk. It really isn't worth it. Have something else against it. Have the stock. Have another call. Do whatever it is you got to do, but spread off that risk so you don't have naked short units. So stand for me. Number 4, the naked short call. What say you about mine, and what is yours, sir?
Oh, man. That one was on my list also. I had that as number 3. So, yeah, I mean, I don't have much more to say about it than you did because that is exactly my thoughts on it. Now, to be fair, have I ever traded naked calls? Yes, there are some times when I think that it's appropriate. But, it's just one of those risks where, and to be fair, it kind of gets into your head a little bit when they describe, like when you're first going through learning about options and, they say, okay, when you're short a naked call, you have unlimited risk to the upside. And that just haunts you. And yes, it is unlimited risk, but I've never seen a stock go to infinity. So, notwithstanding the GameStop and things like that you were just talking about, where it can just be massively explosive, and you really want to be careful about those. But you can never be so careful that something bad never happens to you when you're talking naked short calls.
That is the case. All right, since I jumped in on you, what is your number 4? So you didn't give us your number 4.
Yeah. So I guess you get the 2 for here from me. You mentioned something really key there in talking about naked short calls and puts, net short units. And so in the spirit of that, I'm not necessarily a huge fan of ratio vertical spreads, where you're short more options than you're long. Now, there's a time and a place for them, but they are pretty darn, a lot of times you're trying to get just a little bit more, but taking on a lot more risk. And it can be scary.
Oh, interesting. We have more to discuss there as well, sir. Your number 3 was naked short calls. I was going to have you go next, but you kind of already did your spiel on naked short calls. So instead, I will do my number 3 on my list, which is also a scary sounding strategy, which is up there for our kind of flash poll right now, which is fun. Get over there, add options if you haven't played along. And what is the scariest sounding option strategy of all time? We'll get to that and the results in a little bit as well, listeners. But the strangle, number 3, definitely in there, listeners. It just sounds ominous. You're going to strangle somebody? What the hell is that? So for a newcomer to the world of options, it certainly is one of the more off-putting sounding strategies. But it comes in at number 3 on my list, listeners, because what did we just talk about? We talked about a naked short put, and we talked about a naked short call. What if I told you there was a strategy that combined both of those terrifying things into one strategy? Yes, that is the strangle. The reason why it comes in at number 3 and not higher, listeners, on my list is because you give yourself a little bit of cushion with this one. The strangle involves selling an out-of-the-money naked call and an out-of-the-money naked put. So if your underlying vacillates around, hangs out around the at-the-money strike, you can skate on this and actually keep some of that premium that you harvested at the end of the day. But obviously, if it explodes in either direction, you're going to be wearing it. So that's why it combines my 2 bottom 4 and 5 scariest strategies into one thing. So for that alone, it comes in at the number 3 spot. Mr. Dan, what are your thoughts about my number 3, the strangle, sir? Also a terrifying sounding strategy.
Yeah. I couldn't agree with you more on that one. The short strangle, it's a strategy that has its place. And I've done them. I've done them covered with stock, which is a very different way of doing it. And I've just done them naked, as you described. But yeah, you've got low profit potential with high risks. So, it's a scary one.
All right, Dan, I'm coming up on my number 2, but first let's get yours. What is your number 2 most terrifying options strategy of all time?
All right. My 2 and 1 are related, but I'll give you number 2 right now. The easy ones. Those trades where you're looking at it and you're like, oh, wow, wait, look, this is a no-brainer. This is like arbitrage. Oh, yeah, okay. And you put it on and there's something you missed. Or what's even worse is sometimes when I'm trading total earnings domination, I'll put in a trade and I'll put it in right mid-market. And, the last hour of the day, the markets can be pretty wide for time spreads going into earnings. And I put it in smack dab mid-market, and it's boom, filled instantly. Uh-oh, wait a minute. Why are they so anxious to give these to me? They must be bad. It's kind of like if you make a deal, you always you always gave up too much. And still in the same vein, one more story that I think I've told on this show a long time ago. I don't want to get too in the weeds on it, but there was a time when Ford Motor Company was spinning off $20 of cash back when it was a $46 company. And there's some brokers that just kept selling the crap out of options. And I was just like, wow. Well, me and every person in our pit, we're like, wow, the volatility just keeps getting cheaper and cheaper, and they keep selling it and selling it. And I'll save that for when I talk about my number 1, because there's a little more of a story behind that one. But yeah, anyone where it's just like, wow, this is too easy. How come I got filled so easily? How come this looks so perfect?
All right, a little bit of a tease for Mr. Dan. So we've done my number 5, number 4, and number 3. So now we're coming at number 2, listeners. And this one is one that Dan touched on earlier as well. This is taking what we were just talking about, that naked short put and that naked short call that you have together in the strangle, but you have that cushion, you have that wiggle room of the out of the money. Now, what happens if you get rid of that completely? If you squeeze that down straight to the at the money, now you're selling an at the money naked short call and an at the money naked short put, otherwise known as your naked short straddle, which is my number 2 on my list, listeners. Obviously, as Dan alluded to, straddles to the long side can be scary as well. It's more of a death of 1,000 cuts, though. It's going to sit there and bleed and bleed and bleed, and you're going to look at it saying, come on, stock, what are you doing? Get out of bed here. Let's do something. And it's not going to do, and it's going to sit there, and your straddle is going to erode to nothing. And that's how you usually lose on the long premium side of the straddle. Scary, but in a different way. The terrifying side of the short straddle comes on the short side. The naked short side. Think about that. You're getting a decent amount of premium for it because you're selling at the money options on both sides of the strike. But also now, with every little tick of the underlying, doesn't matter what direction, with every tick of the underlying in any direction, you are now losing money on that trade. So what ends up happening is just a extremely anxiety-ridden trade for the duration of it, where you're sitting there watching the underlying saying, come on, don't tick, don't move, don't tick. And then, of course, it does. And then, of course, you can't sleep. You have anxiety. You're sweating, probably crying in a ball in the corner. It's a rough way to make a living. I used to watch guys do this, especially on expiration Fridays when we would come home to roost on the trading floor. And you could walk onto the trading floor and you could just scan the floor, thousands of people. And you could usually instantly pick out who was short premium and who was long premium. Because the long premium guys, they were busy, they were doing stuff, but they were probably okay. Maybe they had closed some of their stuff out. They didn't seem overly anxiety-ridden on expiration Friday. You flip to the short premium guys, and of course, that's when the gamma explodes. That's when the theta explodes. That's when everything goes haywire on the final day of the option's life. And that's when the short premium guys were really feeling it. They were popping tons. Before the bell even sounded, they were just drenched with sweat. It was a rough way to make a living. It could work out. You could do all right, but for that period, you were suffering. And if you've sold a naked short straddle, listeners, you know exactly what their pain was. You felt that pain before. And if you do this strategy, you will feel it yourself. It's a rough way to make a living. You're net short units in every direction. It's just a terrible way to go. If you're going to do this, by all means, spread it off. Go the iron butterfly route instead. Buy the wings. So make sure if the worst comes to pass, that you are at least protected. But yeah, it's a rough way to go. Dan, my number 2, the naked short straddle, sir. What are your thoughts on that? And then what is your number 1 most terrifying options strategy of all time?
Yeah, naked short straddles. Those can be pretty darn tricky ones, man. Gotta be nimble on those. But I will segue into my number 1, and that is any trade you don't fully 100% understand. So back to that time when I just kept easily buying all these options and forward on my bid, as did our entire pit. I mean, we collectively bought tens of thousands of options. And it turned out that when a company spins off cash, there's no volatility on that cash. You know, cash is just cash. And so it was basically like the volatility level of a $26 company, not a $46 company. And so even though the implied volatility like kept going like lower and lower as they kept selling it to us, you know, more supply, the options after the X date, after the cash was spun off, the implied volatility actually went up, but the price of the options went down. Seemed very, very counterintuitive, and it caught every single one of us in the pit off guard. We all learned a valuable lesson from that, and that is if you don't fully 100% understand a type of trade, stay out. That goes for complex volatility products. That goes for biotechs, who got their first drug in trials, anything. Just stick to what you know, and the more you learn, the more you earn.
Nice of that customer to teach you that lesson on your own dime. You know, how generous of him, sir, at the end of the day.
Indeed.
Yes. The lessons we all learned on our own dime. We could make another show, maybe we will, about that. All right, listeners, now time for my number 1. Most terrifying option strategy of all time. Another one that Dan kind of alluded to earlier on his list. And this is, you call it a lot of different names out there. Some folks call it a front spread if you're old school. We tend to refer to them mostly as ratio spreads on the network. And it's exactly as Dan laid it out before. The most common use case is someone buying one and then selling multiples of another option against it as a way to offset the cost of that option. And your standard ratio, buy one, sell two, we've talked about that before here on the network. The most common use case is in stock repair. There are some other use cases for it. I'm not entirely against the ratio long one, sell two. There, again, mostly in the stock repair or other scenarios where you're not just net short units. But I'm mostly talking here is when people take this strategy and just dial it up to 11. When I was talking to Matt yesterday on the advisor's option, he talked about a client of his that discovered the magic of 1/5 ratio spreads. He tried to talk him out of it to no avail. It's working for them for now. It's clearly not going to work forever, listeners. And again, this goes back to our discussion earlier about being net short units. Now, if you're long one, short one, you're flat. You have no net short or long units. You are even. Now, if you're long one, short two, you're short one unit, and it keeps getting worse from there. If you go up long one, short three, long one, short four, in the case of that client, long one, short five, you are net short 4 units. Let's say it's a call vertical. So you're long one call, and you're short 5 out of the money calls against it. So that one balances out, then you're short 4 units to the upside. You might as well have just sold 4 naked calls to the upside for the amount of risk that you are incurring with your platform and with your account. And also, like we said earlier, the brokers are not idiots. They're going to margin the hell out of you for each of those net short units. So multiply that up for all the extra you are selling. And now for that extra premium you're getting, maybe this call that was going to cost you something, you do it as a regular vertical. Now it's cheaper. You do it as a ratio 1/2. It's even cheaper. Hey, if I do it 1/5, I can get it for a credit. Why wouldn't I do this? They're paying me to buy this call. Well, look at your account. Look where all your option buying power went. It's all gone to this one trade because they took it all. So there is a huge opportunity cost on top of the risk that is associated with this trade. So that's why, for me, Dan, the ratio, and even beyond the 1/2, I'm talking more 1/3 and above, really. The ratio, the front spread, call it what you will. That's why that is my number one most terrifying options trade or strategy of all time. What say you, sir?
Yeah, man, I'm with you. I couldn't agree more. It's those darn naked units again, man. They all seem totally benign and way out of reach until they're not. And then, then it's trouble.
Then it is trouble indeed. No, it's never trouble, though. It's always fun. It's your mail, listeners. Let's get to it now. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, we got some listener mail, some questions of the week. Before we get there, Mr. Dan, I know you have one in your hot little hands. Everybody's waiting. What is the market taker question of the week?
All right. So how different is it trading commodity options compared with stock options?
Not different at all. Completely the same. I just answered your question. There you go.
It kind of almost is, to be honest. There was a time when the equity options kind of dried up a little bit at the CBOE, and I was like, well, what am I going to trade? And corn, grain options happened to be hot. And so I went over and stood in the corn options pit and traded those. And, with a few subtle differences, one is that the options expire into futures, and so you kind of end up with like a term structure futures risk on. And the underlying multiplier isn't just 100 shares. It's like $50 for a penny because it's by the bushel. And it's 5,000 bushels in a contract. So it ends up being $50 per 1 cent tick. But, beyond that, there's delta, gamma, theta, vega, and that's it. They basically work exactly the same. Just, like I said before about making sure you understand stuff, make sure you get down the nuances and the contract sizes. But outside of that, the skills you have now for stock options, you'll be able to use those exact same ones for commodity options.
All right, Dan, let's keep the spooky theme going with our questions of the week this week. We have a fun one going right now. It's a bit of a flash poll. We put it up yesterday to coincide with our advisors option show, but it's running through the end of this show today as well, which, again, dovetails with our top 5 most terrifying option strategies, Dan. We also asked our audience, at the end of the day, what is the scariest sounding option strategy? Gave you 3 choices, but also the other. People are always going to write in with something weird. Gave you Iron Condor. I think iron sounds kind of spooky. You think of Iron Maiden, something like that. Also the Iron Butterfly, even though Butterfly a little less scary than a condor, to me at least. Then the Strangle, or other? Mr. Dan, what is your vote? Do you have an other that maybe we missed? And then B, what do you think our audience is voting for?
I would go with strangle, although iron butterfly, I don't know why that one comes across as scary, but it just seems like it could be a medieval torture device, So, I'm going to say strangle for my pick. And I think that's got to be what the audience is picking. What else could it be?
I personally like a good iron condor, iron fly, because you're right, it has that medieval torture device sound to it. But our audience, they're going pure strangle, Dan. 59.1%. 27.3% for the good old iron condor. 9.1% only for iron butterfly. It's hard to have, at the end of the day, anything butterfly be scary. Of course, you can think of that spooky song from the 70s. I think it was used in that Silence of the Lambs movie, so that could be a little bit spooky. And then 4.5% for other. I'm waiting for the good others to come in. We got some weird others, but nothing good and spooky out there. And then our actual question of the week this week, Dan, is kind of a payoff. You're just talking about Ford. And we were talking last week about cheap options on the show. In fact, let me reveal that right now, the results of that. We were talking on the show last week about what is going on with cheap options. Should you trade them? Some caveats. So we thought we'd ask our audience, when is a stock too cheap to bother trading the options? What is your cutoff level? Gave you three choices: below $10, below $5. There is no cutoff or other. And Dan, 34.6% of the audience went below $10, which was a little higher than I expected. Below $5, 26.9%. No cutoff, 30.8%. So 30.8% of you are wild men and women. You have no cutoff. You'll trade it all. And then 7.7% for other. Fast forward to this week, Dan. We had a related conversation earlier this week, and you were just talking about Ford again on the show. Our question of the week this week, along a similar vein, with Ford trading below $10, Dan. Would you still buy Ford calls, or would you rather just buy the stock? Gave you three choices. Yes, I'm in on Ford upside calls for life, or I prefer buying Ford stock below $10, or I prefer Tesla. So, Dan, what are your thoughts, A, on our audience going below $10 for last week's poll? Kind of surprised me. And then B, you're the Ford guy here. What are your thoughts on Ford now being below $10? And do you think the audience is still interested in the calls, or they prefer the stock?
Oh, man. I think they would prefer to buy the stock. Maybe that's just because I would prefer to buy the stock, because what calls are you going to buy? I'm looking at the option chain here, and the implied, the 16-day 10 strike, which is basically the closest to the money. It's a 36 volatility, which, seems pretty benign. But those calls that are just 16 days to expiration, it's 2% of the value of the stock price. And man, $10 feels like really far away from here. I guess it's only about 2% away from here too. But geez, I don't know. Yeah, the calls are it's just a weird thing. You can't buy them. You can't sell them with stocks under $10 unless you have a very specific purpose. Short squeeze or something like that.
Yeah, our audience going for the stock. 52.4% right now, Dan, saying they prefer Ford stock below $10. 28.6% saying Ford upside calls for life. I like that crowd. And then 19%, Dan, saying they prefer Tesla. This one's going until the end of the week. So you got a couple more days. If you're listening on the podcast, you can listen when this podcast goes live. A lot of people chiming in, including one of our pro members here, Age Delaquare, says, under $10, I follow the Viceroy, our good buddy Alex Jacobson. He says, you buy the stock, don't mess with cheap options. Yeah, Alex has been on our network many times in the past, been on our pro Q&As. He is no fan of cheap options. Since we're paying off polls, we'll hit this one as well, then we'll get out of here for this week, Mr. Dan. A fun, spooktacular, a fun, terrifying edition for the Halloween season out here. But we asked last week, Dan, our actual question of the week. The one about cheap options was really just a flash poll we did around Options Bootcamp. Our actual question of the week last week was, hey, we got more data under our belts now with the whole zero DTE thing. So it's time to revisit this question. Do zero DTE options increase intraday volatility? Heck yes, heck no, or I still need more data. Mr. Dan, sir, 63% of our audience coming in on the heck yes front. Does that surprise you, sir? Or is that pretty much what you expect?
Yeah, I mean, we've talked a little bit about this. It doesn't surprise me that much just because we've seen results from polls like this before. But I don't know. I mean, I don't have a super black and white answer, I guess, for this, but I would put my heck yes versus heck no more 50-50 in my mind. So like a very gray area to me. I think it's a little exuberant to just say heck yes or heck no.
Would you say irrational exuberance, sir?
No, just regular exuberance.
Just regular exuberance. Just good old regular taste of exuberance. All right, listeners, unfortunately, that's all the exuberance you have for our terrifying Halloween episode. Hope you had a fun Halloween, or if you listen in after the fact, as I know many of you are, probably many years down the road. I hope whatever day you're listening to this, hope you're having a good one out there as well. Remember, if you want to join us for our upcoming Pro Q&A session, a little bit late for you on the on-demand side to join us for today's speaking. Always check it out on the Pro podcast feed. The only way to get access to that, theoptionsinsider.com/pro is the place to go to learn more. That'll be in about 15 minutes here. For our live folks, just hang out in the chat. We'll be back in a little bit with our guest, good old Mr. Bill from Senecal Capital Management. And again, for the rest of you, head on over to the Pro website to get access to all that goodness. And Mr. Dan, when folks go to the MTM website, what kind of fun can they find over there?
There's lots of fun. There's free classes. There's access to a wealth of knowledge from fellow student traders, as well as the two Johns and me. And we always welcome you to make your way on over.
Before we roll out, I should mention, Dan, you're getting some listener love here. When we were talking about your spider analogy, I think Anne-Marie Bind, does she just wrote I Heart Dan Passarelli. So you got a fan out there, Mr. Dan.
Anne-Marie's great.
She likes your spider analogies, apparently. So there you go. There's no accounting for taste out there, Mr. All right, listeners, that is going to do it for us on the show today. Not done on the network, though. Back in a little bit for Pro Q&As. Back again tomorrow, of course, for This Week in Futures Options and, of course, the option block. Friday, volatility views, and then after that for options oddities. Then we're back again next Monday with the old OB and the crypto rundown. Tuesday, probably a good Pro Q&A. And then back again another Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
Options Bootcamp is brought to you by tastytrade. Ready to shred your paper trades? Then trade at tastytrade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available on the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.